Happy Friday. Hope you're having a great week. Mortgage rates have not had a great week. I'll tell you that. Rates are now approaching their highest level for 2026. Mortgage-backed securities are at their lowest price for 2026. So depending on where lenders open rate sheets on Monday, we could see the highest rates of the year, unfortunately. And, we've had oil rise back up in price again. Yesterday it was trading as high as $93 a barrel. Today it closed at $89 a barrel. But one other element that's putting upward pressure on rates that we haven't talked a lot about is government debt. So just take the Iran war, for example. Estimated cost of that right now is $38 billion. The government has to issue bonds and take on debt to pay for that war. Our annual budget deficit is at almost $2 trillion a year, trillion. And that equals $90,000 a second that the federal government is going into debt. And they pay for that debt, or they issue that debt by selling bonds in the bond market. Other companies, corporations, finance operations by selling bonds, corporate bonds. And we're in the middle of an AI revolution right now. And AI companies are taking on tons and tons of debt to invest in data centers and all the things that they need for AI. So that adds supply to the bond markets. And, the government bonds compete with corporate bonds. So when you have that much supply, bond issuers have to offer higher rates to attract investors. So that puts upward pressure on mortgage rates, because mortgages are also traded as bonds called mortgage-backed securities. So we're seeing all of that at play. I've got my eye on the 10-year T-bill. The 10-year T-bill has not closed over 4.6% for a week in a row in over 20 years. And we've had a few days this week where it's been over 4.6. It was over 4.7 yesterday. Today, it closed at 4.65%. So that's something to keep our eye on, because that could be an issue just from a macro trend perspective if we see the T-bill closing over 4.6 for an extended period of time. So, we'll see where this leads us. But, with all that doomsday message said, mortgage rates are still at about historical average. So it would not be accurate to say that mortgage rates are high. They're right at historical average over the last 40 years. So even though they're moving in the wrong direction, we were actually below historical average just a couple weeks ago. So hope you have a great weekend. Look forward to talking with you soon.